And speaking of other trades, our chart of the day is Target, because it's popping on its earnings. Stephanie Link joins us now to discuss this trade. She's been adding to it. The sales did fall for the first time since 2016. So what's the read here? Why is the stock, Steph, up near 12%? When you read through this and you hear the outlook, it doesn't sound all that sunny.
Well, I think it's because there was huge profitability improvement. Last year in 2023, operating margins expanded 180 basis points year over year to 5.3%. And in this past quarter, it expanded again to 5.8%. And they're on their path to getting to 6%, which is what they've kind of historically have done. And this is all because of things we've talked about: lower markdowns, lower freight and digital fulfillment costs. But inventories fell another 12%, while revenues rose 1.7%. And this is the key. This is the fifth straight quarter where sales outgrew inventory. That is huge in terms of visibility and in terms of visibility to margins and the profitability story. So I think that's what people are jazzed up about. There's still a lot of wood to chop on same-store sales. It's going to be a slow recovery, but they're giving us a pathway to get to flat to 2% same-store sales for the full year, which suggests that they have confidence in the traffic trends they're seeing, as well as easy comparisons. I think, Scott, their guide is super conservative at 860 to 960 for this year in terms of earnings. If they can do a 6% operating margin and a 1% same-store sales number with a $3 billion buyback, which they have not announced yet, and this new loyalty program, I think that number that they're talking about is so low, I think it can be $10.50 to $11 a share for 2024.
Part of me wants to ask you whether you take this pop and run, because the same-store sales story, which you're just talking about, is pretty dismal. You know, comps were down 4.4%, third consecutive quarter of same-store sales declines. You can get back to flat. Is that the outlook, what you just said? That doesn't make me feel all that fabulous about a stock that's maybe given you a gift today.
Well, they have this new loyalty program, which I think is going to be very exciting. They're focused on a whole bunch of new products. One of the reasons I started adding to the position a couple of weeks ago is because of them going on the offense in terms of new product introductions, increasing private label and that sort of thing. This stock is just back to April 2023 levels, and it's still down 37% from November of 2021. And you only have 20 buys on this stock and 19 holds and sells. And I do think you're going to start to see the analysts start to change their opinion, because there is that opportunity to grow sales. The story's not over yet. That's my point. And at Walmart trading at 26 times, and this is at 17 times, I think this is a much better value.
Appreciate you calling in. Steph, thank you.
Scott.
Stephanie Link, Hightower Chief Investment Strategist. You've been shopping yourself for some retail. You bought Casey's General Stores, C-A-S-Y. Why?
Yeah, well, it links very nicely with what Stephanie was just talking about. Yes, that was on purpose. The consumer is strong, folks. I mean, the labor market is strong, the consumer is employed, and they're consuming. And I've been looking in retail for some time. A couple of weeks ago, I bought Amazon. That's obviously a large cap name. I'm looking for something that's a little bit more unique, a little bit more, you know, on the small side where things are not as well known. Casey's General Store is basically a gas and convenience store chain in the Midwest. Think Iowa, think Illinois, think small towns where this sort of store is actually a social center, not being pejorative or making fun of anyone. That's just literally the truth. Think about a locale where people generally drive 30 miles at a pop and they need to go get gas. And when they go to a Casey's, they get some of the prepared foods there. There's some special story to this story, some special aspects, like they have their own distribution change. They're growing at a measured pace of about 5 to 10% a year. Very good balance sheet. It's a little bit on the pricey side, but I've wanted to be in the space, and I like this story.